Okay, I think we deserve a little bit of a hype song, huh? So let's try that one. I'll be right back. I love that song. Okay, I'm not gonna play it again. Alright, so welcome. Let me play that video without sound for a minute, and I am going to put the chat up. I didn't do it while the song was playing because it was gonna double. There you go. So it's down. And I need this one right here. Alright guys, thank you. I hope you enjoy that hype song. That was one of the original songs that I was like, man, good times. Alright, give me 1 minute. I'm trying to set this up. I miss my other monitor. I have one, I'm just too lazy to to set it up right now. Try to find a stand for it. But anyway, so yeah, it's such a good time, you know, to go back to it again. But again, like, I'm not saying that the earning is going to be like skyrocketing or like the price going to be doing something amazing here, because just like today, you know, they could always smack it down somehow, right? It's kind of, again, like if you were to look at it in like in a discouraging way, and I know I sound kind of down, but I'm not, I promise you. Like, to me, this is like a walk in the park, right? All I have to do is just buy as much as I can before it do what I expect it to do, right? And again, it's just the time horizon, you know. All it is just waiting patiently while other people are just trading in and out of the stock. And in the meantime, you know, you're just chilling and buying, hold, and all that stuff, right? Now, if you're an option person or whatever, you know, you might want to kind of take a look at this. I'll cover this a little bit more because I feel like, you know, most people don't realize this quite yet, but like when people are telling you to buy call option for this or YOLO into a call option and all that stuff, that's very dangerous, and especially at this time, right? I'm not saying you won't be able to make money here, okay? I'm saying that it might not be the money that you're looking for, like hundreds of millions of dollars, right? Unless you're kind of like Roaring Kitty at the time, I'm sure, you know, was able to do what he was able to do, like parking, what, $50,000 in call option. That was a gamble, a huge gamble for him. But at the time, I bet you anything, the implied volatility for the call option that he picked was very low, right? Or I don't know. Again, like you have to look back into his stream to know that. Or maybe he shared it in one of his Reddit posts in her. But anyway, that's not what I'm trying to say. The implied volatility for this week call option or this coming week call option is it's like 260%, something ridiculous. something ridiculous. But anyway, so yes, thank you, Jay. Number 1, number 2. All right. Let's see. Can't stay. Okay, thank you, Sean. Appreciate you. That's good. Okay, so let me see if okay, but anyway, so let's cover the price action real quick. Of course, towards the end of the day, a huge surge in sell volume coming down. But honestly, if you look at the on balance volume again, let me see. Excuse me. I just had Thai food, you guys, so I might be burping as we go. I apologize ahead of time. So, okay. So there you go. So if you look at that indicator right there. So of course, like this is like kind of trying to eliciting that we are selling left and right? But again, this is a 2 hours. If you look at the 4 hours, it tells a little bit different story, right? If you look at the 1 day, it tells even a much kind of better perspective on the volume. Like anytime there's surge in volume, real volume, it's usually, you know, a kind of on balance volumes kind of go up in shares, right? Traded right there. And they can't smack it down equally, right? So if this is an indication of people are actually selling and true selling pressure here, you would say that on balance volume of selling would have been around here, like halfway through, right? At the very least, right? But you don't see that. You see the shenanigans right here. So if I were to draw that from the bottom to where it is currently at, right? Now the trend is a lot steeper for the on balance volume. Now, I don't know, again, like, am I seeing something differently than other people? Perhaps I'm just looking at different things here. But to me, that means that the selling pressure is not real selling pressure. It's just them ping-ponging the share back and forth to each other. Again, unless somebody else knows knows more than me and could educate me on that front. Would be great, right? Just to know the expert on balance volume here. And this is even more egregious if you look at this, right? So look at the price. Price is higher from here to here. Price lower, but the on balance volume goes up right there, right? Unless I'm looking at the the wrong thing here. So that's another discrepancy there. So again, I always look at that indicator because I just feel like it tells a different story than what you're seeing in the price action. But to me, again, price action is good for traders. Traders love this type of volatility, right? And anytime there's earnings, of course, they're stampeding, to either sell or buy. But technically, it's buying, right? Buying pressure all the time. Even this one, hardly any volume whatsoever. The price still go up anyway, right? So around earnings time, I bet you anything, again, they want to entice you to buy call option in order for you, to lose or whatever. So today I was able to add more shares. Hold on, let me see. I should put this over here. I was pretty proud of myself getting at 1340. I was like, oh, how low can it go? Well, it went lower. So I did that today. Just a few shares here until I get my other fund to clear again. Currently, I'm shorting NVIDIA on the inverse one. I still have that. So we'll see how that goes. I did add some more to that position. So currently, I don't know. Again, I probably would lose a little bit because of the NVIDIA went up in price for some reason. And I know why. They've been pumping it like crazy. I don't know. Thank you. Hello, Jay. No time. Okay. So one of the things that I want to show you, of course, let's look at the volume. 4.4 million shares being traded. At least, a little bit more than more elevated volume, since forever already, right? If you look at the histograph right here, the bar is not as high as the earnings back then. So I don't know why they did it this way, where before it was like a couple of days before earnings, but now a couple of days before earnings they just smack it, right? Perhaps again they're trying to break this resistance level right there. I'm not quite sure what they could do, what they're capable of. Come Monday, of course, remain to be seen. I don't know how are they going to be able to do this. But anyway, so let's look at this as well. Now this is nothing new. Of course, like if you're aware of this channel before, I covered this a lot. And short interest, short volume, right? Reportedly, there you go. I mean, nothing new about this stock, right? But 82% is off exchange. So of course you're not going to see the price action, right? And any price action at all is to the downside. Indicative of, again, like, a share is available for these institutions or whoever wants to short this company, and they are able to do that at a very low cost, I bet. If you look at, I think there's a cost to borrow here, right? Borrow fee. Right there. I mean, they're screaming for them to short this, right? So 700,000 shares available to short at 1%. Well, the reason why it's so low is because, again, nobody wants to short this, right? But for those who brave enough, the brave souls out there who wants to short this company, will have to pay 1.4%. And I think this is a yearly cost too, right? So again, and they're counting on the fact that you might be antsy enough to sell out of this company, and that's why they do it. And then you've heard of the misinformation about how GME missed earning when they have not report earnings yet. It's like, what? And so yes, again, cost to borrow is counterintuitive. If it's low, that means there's low demand for it. If it's high, that means there's high demand for people to short this company. It's the opposite of what you might think. Okay, so let's look at, hold on. What am I? Oh, option chain right here. Okay. So for this week, there's a, let me see, I bet you, okay, so they were beating it down to even lower than the max pain for this one. They don't mind losing it to the put holders. Okay, so it looks like they were pushing it to the point where the 2000 contract of the put went in the money. So that means they're forced to sell shares to whoever owns the put, or put buyer or whatever, and then 1.1 thousand as well. Contract being, in the money on the put side. And here's the reason why they don't want it at $14, because 5,000 contract would have been in the money for the call option, right? So you'd rather lose to the put side because it's only 3,000 or close to 4,000 contract right there, versus 5,000 contract on the upside, right? So again, this is what market makers do. They manipulate the price down, up and down, to remain neutral, okay? Now I'm saying that neutral, like I have to put that on quote, because there's nothing neutral about this, right? Neutral about this, meaning that they have the ability to create the price movement as needed to benefit them most, right? Whatever the most beneficial to them, they're gonna do it. So how do you mitigate that? Just buy and hold shares, not contract, not anything, right? So again, if you don't know what you're doing, you might not have the patience to hold it until the end. Now, call option has this implied volatility. It just means that, the higher the implied volatility, the higher the premium. So for the call option buyers out there, you have to pay more for betting either for or against GameStop, right? Both sides, the call and the puts. Okay, so that's the whole point I'm trying to tell you. If you want to buy calls right now, or even buy puts, like maybe you think that the company's going under right now, you have to pay a pretty pennies for it, right? Now, with that being said, though, I do have a call option, long dated one. 2 years from now, I did pay a lot, okay, for what I buy, but again, it's not like a whole $100 here. So I bought one for the strike price of 17 for 2026. So for disclosure, I have 2 contract there on the call size. Do not have any puts whatsoever. Because that's ridiculous, right? Currently though, there's some open interest right here. It's so weird though that they don't put the implied volatility here. I'm sure it's fluctuate hours on end, right? It has some fluctuation there. Hi, Manuel. Thank you for joining. Let's see. What was I going to point out here? I don't remember what I was going to say on that one. So again, like long-term dated, it's called leap option, because I expected GameStop to do a lot better. By that time, hopefully they have proved Wall Street that they are able to earn income year on end, every single quarter, positive, all of that, right? And there's a lot of people who would wait for those type of metric to like for Ryan Cohen or GameStop to prove to them that they're gonna do that. Now remember, these people, when they invest, talking about investment or pension fund and all that stuff, they rub shoulder together, and oftentimes they just sheeple here, they just follow each other and each other tips and whatever. And there are a ton of institutions out there that are just looking for highly profitable company, right? Let's say a company who that make $500 million or up, right? So that's their mark right there. And so until GME earn $500 million a year on up, it won't even hit their radar of maybe moving some fund into that, right? So that's what my point is that, perhaps it's going to take a couple years for people to realize how great GameStop is. So that's why I think we are early in this trend, right? We've been in here for 3 years, and we've been studying, well, when I say we, I'm talking about myself here. Kind of learning about this company and all that stuff, and this is the value that people don't realize is the long-term investor is gonna reap the benefit much more than the people are just trading in and out, right? Again, I learned my experience from Bitcoin here. Remember, I saw Bitcoin at $100, did not buy into it until it was $1,000. When it was $1,000, I put some money in, right? Kind of earn a little bit, a couple hundred here, maybe like $10 or $15 or $50. But at the time, it was a lot of money for me, even just seeing the growth of 1,000 and then turn it into, $70 profit. It was like, oh, wow, it grows. So that was my early stage. And when I did that, it was like, oh, now it's dropped down, right? And then I forgot about it, and then it went to like $16,000, right? And then I went back to my history. It's like, shoot, at one point I was owning 1.2 Bitcoin. So if I didn't sell it for profit, small little tiny profit, back then I would have had hundreds of thousands of dollars, turning, a couple thousand that I had, at the time, because I was just learning trading and all that stuff. And again, like I look back in the history, at one point I had 1 point something Bitcoin. But then again, I sell out and, was happy with my gain, like, a couple percent. And I thought I made it in life, right? But then come to find out 4 years later, it was like, oh shit, right? And that's when I started to kind of like accumulate, and that's when I become more profitable. Like, again, because my goal was a long term. Like, I'm not just trading in and out based on the fluctuation of people, emotions, and all that stuff, right? And so I just forget about it, and then I just accumulate, forget about it, accumulate, and then I had to wait another 3 years in order for that whole profit that I got. Much more money than I've ever dreamed of making in 1 year. So now, for most of you who watch this, I'm sure you have a lot more than me, like 10 times, 20 times more than me. But for me to earn that much money, that was like the eye-opening for me, right? And I've been learning ever since. I've kind of deviate from crypto now to the stock market. It's a little bit different, right? With the crypto, I've always joked, like, I've got my training from holding crypto. Like, I don't care if I had a 10% a day drop. I just keep buying. You know? Now with the stock world, obviously, you know, today what 5%? How long? Hold on, I should take a look at this. So my point is, like, this one is a walk in the park for me when I see GME, you know. GME drop down this low. Yeah, 4% today, and people are whining and saying, oh, look, it's going bankrupt, right? Now, I understand, like, there's people who are kind of just believing the narrative, obviously, right? They have a news source that they trust, and they just take that as a face value. So, for those people, I mean, it's hard to convince you because you already trust the news sources that, you know, GameStop is not valuable. You don't see any value in it. I get it, but, you know, I just implore you to maybe take a look at it a little bit closely, right? Closer than than previously. Perhaps you see some gem in the balance sheets or whatever, right? But to me, again, like, the balance sheet is just the beginning of it, right? We have clean slate already, and people just don't realize it because they saw, oh, we lost in three quarters, we lost $50 million or $56 million or something like that, right? And so they just look at that number and they just, again, assume that GME's gonna kind of trend that way. But let me just get off of GME real quick. It was curious to me because, of course, I've been talking about NVIDIA. People are talking about NVIDIA recently, right? AI bubble and all that stuff. And so currently, NVIDIA is close to $2.3 trillion, okay? If you look at their P/E ratio, it's high. Like, you remember Amazon was like 80 or something like that, or 77. Now it's 79, right? Now again, that's according to the price action. If it's going higher, it's gonna, you know, this is also gonna go higher as well. With the exception of if NVIDIA could sell their product to whoever want to buy those AI generated chips or whatever, in order to compete with the new world, right? My point is that it's too late for you to get into this already. But yes, you might be able to make some money on it, but how much money for you to 10x in NVIDIA, okay? The market cap would have to be $20 trillion, okay? For you to 10x from here. Can you imagine a company with $20 trillion? In the next what? How long do you think you're going to get that? No, you will never going to get it. So the risk is to the downside, okay? In my opinion. Just take me, okay? I'm not saying this is a terrible company. Of course they have product. Of course they make product. But really, can this product make you fly? Can this product, you know, make you a gazillion, or make company a gazillion and gazillions of dollars more? I mean, the company that buys this technology would have to pay a pretty penny. And again, like, if they're laying off people because of this AI thing, who's gonna have money to buy into those products that the AIs are making, right? So I don't understand how that would work out. And on top of that, not to mention the energy usage of these type of chips, right? Do you have enough, you know, energy to generate those type of thing? Remember when Bitcoin came around, when they were bearish on Bitcoin, what did they say? Oh, Bitcoin consume energy and right? The narrative has always been changing over time. It's like, what the F, right? You can't even, it's like, if you blink, you would miss those narratives, right? And it's like a new one pops up. It's ridiculous in the way that they are But again, they do this news cycles. The news people are on screen right in front of you. They are there to manipulate you. Okay, they're not there to give you an honest opinion on anything, right? And that's why I'm like baffled at some of those, things that's being said about a certain company, especially, especially GameStop, right? So of course it's a strong buy, right? Even at this price point, it's a strong buy for these people. Stock pullback from the weekends. Okay. Now Palantir, I could stand behind. Of course, like it's a newly emerged company. I don't know how high it's gonna go, but yeah, Nvidia it's too late already, in my opinion, right? But hold on, let me see what are they saying here. Hope it's not too loud.
It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Let's bring in David Miller, Catalyst Fund's Chief Investment Officer and Senior Portfolio Manager. And let's get right to your buy here. And we'll do a little tease. Your Goodbye is one of those Magnificent Seven stocks that we just heard Anthony talk about. But let's get to your stock that you do like first of all, and that is Hims & Hers Health. Now this is an interesting one. It's had a good, year to date so far. It came public back in 2019 as part of a de-SPAC, right? And so let's get to your bull case here. Basically that it's a grower is your first point.
Absolutely. 47% revenue growth, massive revenue growth. Even when the stock was declining, interestingly enough, it was growing incredibly quickly and massive margins.
Yeah, and also the company is now profitable, which is something it hadn't been on a regular basis here. So is this something that now it's going to be more consistent in terms of its profitability?
Absolutely. So it's one of the few SPACs that I really like. And now that they're profitable, when you're profitable and you have massive margins and you continue growing and that percentage of their costs that are marketing expenditures continue to decrease, you'll just see that net income continue to grow very rapidly is my anticipation.
Now,
I wonder if they say that about GameStop. When will come out to be positive? Huh. I doubt it.
Oh, this company, for those people who aren't familiar with Hims & Hers, they provide men's and women's health products online, right? So they sell them online. We used to see pre-pandemic, they had a lot of ads in the subway here in New York City. So that was one of the ways I first got exposed to them. And what is this what problem are they solving for customers that you think is unique?
I'd say they're solving three huge problems for customers. First is when you wanted medication in the past, you had to go into a doctor's office. Now, if that were for an embarrassing problem like an ED or balding or things of that nature, or things where you just don't want to go to the doctor's office, now you can do it on the computer. Two is you used to actually have to go to the pharmacy to then get that medication. They ship it straight to your home in a couple days. Three is that these medications used to be either very expensive if you paid out of pocket, or you'd have to buy it through insurance and a copay. It's actually cheaper to buy these directly than the cost of the insurance copay. So it's saving you money, and it's saving a lot of time, and it's making life dramatically easier, which is why you're seeing so much customer adoption.
Right. And as always, when we talk about these, though, we got to talk about some of the risks to the potential upside. So if we look in this case, maybe there could be some changing regulation around telehealth. And there's also competition from Roe, which is another startup. So let's take the first of these first. What could happen on the regulation front?
So there's already been some changes in regulation around the pandemic and when they made it a lot easier to do telehealth. Now, that hasn't affected Hims & Hers yet because they're generally medications that are easy to get, very little in the way of side effects. They're not like significant antidepressants or painkillers that are addictive. They're things that pose little risk, but that could always change. Second to the point with Roe's a direct competitor. They're both great services. Potentially one will do better than the other, but this is also a very big space and they're both solving a huge problem in removing the need to go to the doctor's office or the pharmacy or pay more money. So when you can solve all three of those problems and make life easier for people, there's a good chance they can both do well.
Interesting. All right, now let's get to your Goodbye. And
Okay,
this one,
so
I'm going to...
hold on. Did he say they're profitable? Hold on 1 second.
Yeah, and also the company is now profitable, which is something it hadn't been on a regular basis here. So
Okay, so they are profitable. When are they doing their earnings again? Okay, so the reason why I look at that is because I was like, anytime I hear these type of people pumping another company, I'm skeptical, right? Like, I'm very skeptical on those type of news. So let me see real quick. Okay, revenue up. Okay, pretty substantially. Up by 100%. $1 million positive. Woohoo! What? All right. So one whole $1 million, you guys. Yes. Imagine if that's what GameStop posted. If GameStop were to post that, imagine the I can't even imagine what the news would say about GameStop. Oh my God, $1 million. I mean, I hate to laugh at it, but it's possible that we're gonna post $1 million. Sorry, I'm just cracking myself up right now. Okay, so this is Hims and Hers. Never heard of this company before. So apparently they just post a earnings. This is a quarterly though. I'm seeing something different, you guys, so that's why I'm just trying to verify this real quick. Okay, 1 second. Okay, announcement May 13. They already had one. So the estimates reported. Okay. Okay, so they... Is that revenue? Earnings per share. Alright. I'm looking at earnings per share. Consensus 555. Fiscal year, March. Change in consensus. So this is what we need to get, like, to get them to flip somehow. Hold on. Hims and Hers. Okay, so the projected forecast 14. Okay, so they're expecting them to earn more money per share. So around 10 cents to 46 cents per share, okay? For this particular company, they report fourth quarter. Okay. So it looks like they've been missing expectation at least 4 times in a row, with the exception of one. Okay. So why are they still promoting it on the news? You know. Okay. So let's go back. So this one hasn't been updated then, correct? Because net is still 23. I guess their quarter ends end of the year. That makes sense. But why is the discrepancy of 1 million versus... I don't know. It's so weird to me that this company is being reported as profitable when their net income is less than... is in the negative $23 million. Huh? Am I looking at the wrong thing? What is going on here? Okay, so at least they have some shareholder equity. Their returning earnings is negative $300 million, $368 million. So what does that mean? It means that it's even higher into the negative than GameStop. GameStop only have $275 million currently in the negative of retained earnings. So how much cash do they have? Much lower than GameStop. Now, of course, I'm comparing to a growth company here. So of course, there are 2 different companies here. Don't even come in here and say, these are two different companies. Okay, so the reason why I looked into that is because, again, I was just curious about the balance sheets of which, these stocks get promoted and all that stuff. And of course, they want retail to buy into it, right? But right off the bat, though, with this particular company, you could see that the institution owned much higher percentage of this company already. And so, which is understandably why they want to push it out to retail. Now, GameStop is the opposite, right? It's only 20% institutional ownership, so that's why the media don't push it to you, right? So you gotta realize it for yourself if you wanted to do that. So net income is negative as if to this date, trailing 12. So right now, if you look at the, cash flow, cash flow positive, which is good, at least. Book value of $1.67 per share. So that's only 10% equity in the company. Okay, so gross profit margin is pretty high, so perhaps that's the reason why they want to invest in this company. But again, the only discrepancy is that they said it was net positive, but or profitable, or whatever. Unless profitability means cash flow positive, right? But by that token, GME is profitable too. So, but they never say that, right? On GME. Again, I'm just analyzing whatever these people are saying about this company here. Now, I respect that he said that NVIDIA shouldn't be a buy, right? But let's listen in.
I think the company is going to grow very rapidly, both on the top line and the bottom line. The real risk here to people who decide to own NVIDIA is they're paying 25 times revenue for a company that has a $2 trillion valuation, roughly. There's never been a company in history that's justified that type of valuation at that type of size. You have to really think that NVIDIA is going to be the largest company on earth to justify that. Now, will they be? It's certainly possible. But are there less risky ways that you can get a better risk-adjusted return? I think so.
And this is an interesting point that you make as well. Back up real quick, that semiconductors tend to be cyclical, tends to be a commodity business. Now, NVIDIA's argument is that the complexity of the chips that they're producing has decommodified it to some extent. Do you not buy that argument?
I do buy their argument.
Okay.
It's clearly true. There's enormous demand for their chips right now. Right now, they have a game-changer chip. Nobody in history before would pay $250,000 for a chip. There's no question that their company is doing incredibly well, and they're going to continue to do well in the near future. The question is, will that continue indefinitely? Historically, you've always had boom and bust cycles in semiconductors, chip makers. It's getting priced now like that's over. There's never going to be another company that's going to compete directly with NVIDIA, and that remains to be seen.
Yeah.
Okay, I like this guy when he's talking about NVIDIA, okay? Well, I'm biased because I'm shorting this company, so.
And then finally, this kind of sums up what you alluded to a couple of times, that it's valued as though it's going to be the biggest company, as though it's never going to see any competition, et cetera.
Exactly. That's the big question. If they could maintain this lead that they have indefinitely, sure, they're definitely going to be worth it. But is there a reason to think 5-10 years from now, other people can't catch up and they're going to have incredibly high, unusual margins forever? My thought is less likely.
Gotcha. And then the risk to the downside case here is that, in particular, what they just announced, that Blackwell chip, that it is going to be tough to compete against.
Yeah, and it absolutely will be. And to clarify, I'm not saying NVIDIA is a short.
Gotcha.
I'm saying I'd avoid it. It's certainly possible that AI will be the biggest thing ever, and it very likely will be huge. The question is it worth $2 trillion today?
Right, and maybe there's other ways to play it, as you mentioned. Just real quickly here, are you long hims and hers?
Yes, I am.
But you don't have a position in
Don't
it?
have a position one way or the other in it.
Okay, gotcha. So let's sum up what you're telling investors here. Basically, you say you would buy hims and hers given its growth, it crosses the tipping point into profitability, and it creates amazing value for.
Oh, it's crossed a tipping point. Okay, all right. We are too in GameStop. Hi, Amber. Thank you for joining. Yes, so I was just looking at the balance sheets of Hims and Hers. Never heard of this company before, but anytime I heard about anyone in Yahoo Finance present you something about other company, I'm kind of curious about the balance sheets. Now earlier I thought she said profitability, but now she kind of like summarizing it, and she said on the tipping point of profitability, which is right now they're at negative $23 million in net income. Now let's see, what else did I see just now? Current ratio is pretty good. I guess debt to equity, yeah, that was like a red flag to me. So this means that debt to equity, oh, okay, very low debt. Okay, let me verify that real quick, because I'm like, how are they? Okay, hold on one second. So they have some cash on hand here. Inventory, goodwill, of course. That should be subtracted from the shareholder equity, which is about half of that. Long-term debt right here. Okay. So they have close to $8 million in debt versus equity. Okay, that's not too bad though, very low, but it seems like it's increasing, so we don't want to see that. Why are they trying to load more debt into the company? But so far, I mean, I'm not saying it's a terrible company to own here. Let's look at the stat real quick. Okay, so at least this score is high enough. Okay, interest coverage hasn't registered yet. Yeah, I guess like the selling point is the fact that they do have high gross profit margin here. But I would still wait. There's a lot of regulatory reason to wait for that. In healthcare, usually, regulators are pretty notorious at, kind of smack down the new biotech or new emerging health company out there, to try to protect the old guard, right? People are, winning their whole life. Because by association, obviously, it's like, okay. So that's that. I don't know if I have any more to talk about, you guys. Bitcoin's been kind of dropping in price. Oh, actually, I do have something to talk about, you guys. Hold on, give me 1 minute. Before I do that, I want to see my chart here at one point. So hold on. Alright, so I wanted to wait. I don't know if it's ever gonna drop down to that price though for Bitcoin here. Originally it was right here, right? This is the price point that I was predicting that it was gonna come down to. But a pullback from there. I wonder if I could do a Fibonacci here. No, that's not the right way to do it. From the high to the low. Okay. So high to the low. It just retraces back to the first band, and then second band, third band. So usually, and the golden ratio here. So yeah, it could come down, trace it back to that. That's what I'm looking for to accumulate Bitcoin. So around this area here. Again, like if you want to accumulate Bitcoin or any crypto at all, it's best to wait for the pullback. Even right now, right? If you wanted to do that, but again, just be cautious that it's going to be a long-term hold, and chipping at it little at a time. And this is how I was able to kind of take profit off of this, because I was accumulating around here, around this time right here. Just, whatever I had, like little at a time. And I sold in this junction here, and then I went all into Ethereum, because I know Ethereum was going to follow, right? But anyway, that's how I was able to kind of predict that. But I'm not saying it's going to do the same exact thing here, right? It's all me in my head. I was like, okay, what is most likely to happen in Bitcoin here? Institutions is coming in now. Of course, they have a different tools to try to get you to FOMO in, FOMO out, in order to make more money on top of you, right? Because again, they have the power to move the price. You don't. But if you're smart, what you do is just accumulation, right? Know when to accumulate, know when to take profit type thing, right? So that's that. But okay, so I was watching. I might end on this one, right? I don't know how long it's gonna be, but I was watching these two. Of course, you know who they are, Tony De Niro, and this is Market Midway. Now I know, like, these people, we know who they are. They usually pump AMC and all that stuff, and they did a live stream talking about how AMC is meeting up with the lender to discuss AMC debt. So I bet you anything, when GME posts earnings, they're going to come up with some sort of good news for that. Oh, AMC was able to resolve this debt and push it back to the year 2025, or 2020, whatever, 50, right? Whatever, right? That they don't have to pay off certain senior notes or whatever. Perhaps just, again, or in talks, again, these news people, they have a way of kind of like coming up with titles that is like twisting it so that it's a positive thing, right? Oh, they're in talks of doing this, right? It doesn't mean that they're doing it, but they're in talk of doing it. They're in a meeting discussing it, right? And of course, they're gonna pump it up, like as if like it's going to be helping AMC staying afloat or whatever. But it's, in actuality, you can't. Like, you have to make the money. So if the balance sheet doesn't support, you making money, which AMC doesn't. Let's visit that real quick. I know, like, these people are trying to convince you that the company is viable, the debt restructuring is possible to save the company and all that stuff. No, you can't. Let me see. Finance. Trailing 12. And we went through this before. Moran's probably, if you watch Moran's old balance sheets video, even the new one, you would understand why. So, I mean, see, like, even most recently, they were able to lower the loss on cash flow negative. They used to lose less on the cash flow end, right? Now they're losing more this recent quarter. And it's ridiculous to say that this company is going to be valuable. How are they going to be making money, right? Be making money in that sense. Okay. So operating expenses is $600 million right there, right? But their gross profit, again, their gross profit, which is before you subtract everything, is less than their operating expenses, you guys. So this is why you cannot make enough money. So the only way that they could do that is to lower the cost of revenue, right? So even previously, okay, so operating costs more, operating costs twice as much, operating costs close to 3 times as much, twice as much, right? Every single quarter there, you could see that. And not to mention interest. And it's going up as we speak. The interest alone is going up. On top of that, they don't make enough to cover the expenses of the business. So how are they able to negotiate anything, right? I don't know. Again, it's ridiculous, in my opinion. Anyway, but I'm sure they want to keep AMC alive to drag on the fact that AMC is the same as GME, again, to kind of dampen the price action of GME. That's all they could do, is to kind of like suppress the price action of GME by, associate GME with AMC every single day, right? Every single minute also, right? Anything they can to kind of like try to dim the light of GME here. And we all know this. I'm sure, people who been here for a long time. I'm preaching to the choir here. Jay's here. Lynn's back. Hi, what's up? GME's getting to my price target. Oh, okay. What was your price target again, Lynn? I think you said 12 or 11, right? That's what you said? Hey, I'm continue to buy like around here. So all of these purple line are me just trying to accumulating a little bit at a time. So I'm closer to maxing out my Roth IRA for this year. So I'm very safe. For the year 2023, and so I only have 1,000 left to do that before I max it out. So I'm waiting for that $1,000, and hopefully, if it's at $10, oh my God, what is that? What is that? Let me do the math. I can't even do the math. If it's $10, what is that? 100 shares, you guys, of Gamestop. If ever gone down to that point. But if I get it before that, I'll buy it at whatever price. But my goal is to do it by Monday, but I feel like I won't be able to do that. It's too much money for me because I need to file the tax and make sure that I have enough money to pay for the tax and stuff. So I'll be sad. But after earnings, I will be able to scoop up more. But I'm happy. I'm happy with the position that I have long term. So, you know what I could do too? Just shave some of my midterm position and just, because currently I'm doing cash secure put on the 20, what is it? Let me see, 28, March 28. And if you look at the premium or the implied volatility for that particular week, it's like 200% or something ridiculous, 230%, right? And that is like, wow, premium is so high. But my strike price, I picked this one because of the premium, right? I want to get a sign though, don't get me wrong. So I pick a higher strike price for that. So I picked the $15.50 for that strike price, and then I collect that premium, and so like $300, you guys, $300 per contract. So that's good. And then I just reinvest that $300 into buying shares on GameStop again. So that's how you amplify your gain, right? Assuming that I would get a sign at $15.50. Now normally if you want to do this correctly, you want to pick a strike price that is below the market value. But I just want to get a sign, because like if you pick it below, you might not get assigned, and so you won't get the share of GME. So I want the shares of GME. That's why I do a cash secure put that way. But the premium is just so high that I can't pass it up, right? So even then, like I might not even get a sign at $15.50 because the earnings, I bet you anything, it's gonna be a lot higher than 15. So I don't know. I might just take a quick profit and then just buy shares as it runs up. I don't know. Again, I don't even know what I'm gonna do. But I could use that proceed and then just move it to my Roth right away. So I would have that money before earnings, right? No, but earnings would have to. Yeah, that's true. Never mind. I'm just planning ahead, you guys. I'm just speaking out loud over here. Anyway, how's everybody think about? Oh, right. I keep forgetting about this. Okay, so I did talk about AMC already.
And so you would think that gets passed through.
So I mean, George Garman. Go watch this one. This is a good one too. It's like about the Fed and stuff like that. Okay, not this one. This one. Now we all know all the manipulations that's happening in the DeFi, crypto
Tangible
space,
value.
and all that stuff. And this video just pops up on my thread, and oh my god. So of course this guy is trying to recap what happened in the GameStop saga and all that stuff, but let me play a snippet of it. I don't know if I want to play the whole thing, you guys, but I want you to see how manipulative this is, and I'm sure they're trying to get more people to be in this, right? And this channel is pretty new, I bet. Like, I don't know how to check when they joined, but already 1,000 subscribers already, right? This is the beginning of their pump again, right? Again, this is what happened back in the day when they push AMC right in front of you, okay? I'm not saying you can't make money on these coins here, the meme coins or whatever, but you're not hurting anyone. You're just hurting each other, right? Whoever got in first versus somebody who got in later. So that's the difference. But if you, and again, I hated to put it that way. Oh, you're gonna hurt somebody by buying into GameStop here. Not like that. Again, if you want to invest in GameStop, and kind of along the line of these stories that's being told to you, then the share is the thing that is going to make that happen. But let's listen in, and I'll be right back. Okay.
Back? Hey people, the rumor on the web is that the GME meme is making a triumphant return, and this time it's venturing into the crypto world. Like the unforgettable 2021 saga, GameStop hints about diving into a digital gold rush. No more sticking to traditional deals. Our favorite gaming giant is ready to explore the exciting realm of cryptocurrencies. Let's join forces as we decode their crypto moves and uncover the mystery behind GameStop's bold leap. Fasten your seatbelts for another roller coaster ride in the uncharted waters of crypto. Put aside those power-ups and prepare for some serious FOMO. The GME saga is unfolding in a new dimension. Are you up for this adventure? Let's dive in together. Where it all started. Remember the epic GameStop roller coaster in 2021? The meme stock madness that had everyone glued to their seats? Well, buckle up, because GameStop is making headlines again, and this time it's all about crypto. In January 2021, GameStop became the underdog hero, shaking Wall Street up and causing chaos for their hedge funds. But that was just the beginning. GameStop wanted more than the status quo. It started transforming from the traditional retail scene to the digital era. Zoom into 2022, and boom, GameStop drops a bombshell, an NFT marketplace. Yep, they're diving into the cryptocurrency pool. And guess what's happening in February 2024? GameStop partners with Immutable X, a blockchain powerhouse, sparking even more speculation about their crypto ambitions. The GameStop story left an indelible mark in 2021, turning it into the ultimate meme stock. Now, with a leap into crypto, everyone's asking if GameStop is ready to rewrite the rules once again. Right here, we're diving deep into the buzz surrounding GameStop's crypto adventures. Join us as we unravel the details, exploring whether GameStop is truly making waves in the crypto world. Hit that subscribe button because you don't want to miss the next chapter of the GameStop saga. Let's explore the digital frontier together. It will be wild. Debunking the back-in crypto claim. GameStop has permanently exited the crypto scene, closing its NFT marketplace and crypto wallet. This is separate from the GME meme coin's independent activity. Despite past crypto engagements, GameStop has yet to signal a return to launching its crypto or re-entering the NFT space. Contrary to sensational headlines, the whole narrative reflects a measured approach. The current chapter may be sealed, but the potential for another crypto adventure remains uncertain. Stay tuned for potential plot twists. The unequivocal closure of GameStop's NFT marketplace and crypto wallet, driven by regulatory uncertainties, occurred on February 2nd, 2024, following the permanent shutdown in August. Trading is no longer an option, but users' assets persistently remain accessible on the blockchain through alternative platforms. GameStop's past crypto engagements. GameStop's crypto escapade wasn't fleeting. They joined forces with heavyweights like FTX US, a major crypto exchange. This wasn't just for show. They rolled out crypto-themed gift cards, injecting a dash of digital money into your routine shopping spree. Imagine snagging your favorite game with a crypto gift card. Pretty cool, right? Yet, the journey hit some financial speed bumps. The bankruptcy bug hit hard, and the FTX partnership had to call it quits. Blending old-school retail with the glitzy crypto scene can be a challenging ride. GameStop's crypto tale mirrors curiosity, but also financial reality checks. Eager to embrace
So wait, are they saying that FTX partnership suffered because of looming bankruptcy of financial hardship for GameStop? What?
Trading is no longer an option, but users' assets persistently remain accessible on the blockchain through alternative platforms. GameStop's past crypto engagements. GameStop's crypto escapade wasn't fleeting. They joined forces with heavyweights like FTX US, a major crypto exchange. This wasn't just for show. They rolled out crypto-themed gift cards, injecting a dash of digital money into your routine shopping spree. Imagine snagging your favorite game with a crypto gift card. Pretty cool, right? Yet, the journey hit some financial speed bumps. The bankruptcy bug hit hard, and the FTX partnership had to call it quits.
What? No, we call it quit because it was a fraud. This guy. See, this is the type of misinformation that they're spreading. We're going bankrupt, that's why we severed the partnership. Like, what the hell? Anyway, Jay, 4% is a lot for me because of how large my position. Okay. But it still doesn't faze me because I know the truth here and I won't sell. Okay. Sorry I was late chatting because of talking to my son. Okay, that's fine. No worry.
Blending old-school retail with the glitzy crypto scene can be a challenging ride. GameStop's crypto tale mirrors curiosity, but also financial reality checks. Eager to embrace the new, they faced a bumpy road, a bit like dipping toes into a pool, only to find it was too chilly. Before the chill set in, GameStop had serious crypto dates. In 2021, they paired up with FTX US for those crypto gift cards. Also, they waltzed with Immutable X for an NFT marketplace. Think of it as a digital art fair, but on your gaming console. Yet, the FTX US partnership hit a snag in 2022. GameStop's financial struggles led to a breakup, showcasing that blending old-school retail with the flashy crypto world isn't always smooth.
See this? Like, GameStop looming bankruptcy? These people.
In a nutshell, GameStop's crypto journey mirrors your friend testing the latest tech gadgets. Thrilling initially, but sometimes encountering a hiccup. The recent caution feels like taking a step back to catch a breath. The GME meme coin. Hype or hope? The GME meme coin is a peculiar player in the crypto scene riding on the GameStop frenzy. But hold on tight before you consider joining this crypto carnival. Despite sharing GameStop's ticker, this token isn't holding hands with the company. Born from the chaos of the 2021 meme stock saga, the GME meme coin hangs out on decentralized exchanges, driven by community vibes and a generous dash of hype. Here's the twist. The coin's value is a wild ride. Imagine it soaring one day, fueled by social media buzz, and the next, it's plummeting faster than you can say crypto. So, if you're eyeing a dance with the GME meme coin, caution is your dance partner. Unlike traditional investments tied to actual companies, meme coins like GME often lack tangible value. They thrive on the winds of community sentiment and the unpredictable social media trends, making them riskier than a game of chance. Sure, you might catch wind of stories featuring crypto millionaires overnight, but for every success tale, there's someone left holding the bag. So, is the GME meme coin a passing trend? Perhaps. It may ride on the coattails of GameStop, but it dances to its rhythm, bringing its own set of risks. Before you consider joining the GME meme coin spectacle, do your homework, understand the roller coaster of highs and lows, and remember, investing in meme coins is like navigating a high-stakes game with ever-changing odds. Maybe sit back and enjoy the show from a safe distance. How is GME doing currently? As of February 14th, 2024, 4:53 a.m. West Africa time, let's peek at the GME meme coin roller coaster. Priced at USD 0.002972, it's been on a wild ride, down 41.72% in the last 24 hours and 8.4% in the past week. Sure, it had its moment. Folks even dubbed it the most legendary meme coin after a recent surge. But reality check, that surge followed by a significant crash. Look at its rank on CoinMarketCap, number 2,325. Yeah, it's hanging out in the back rows, and we've got limited intel on the supply front, hinting at potential risks. On the bright side, it's still up over 100% from a month ago. People are still talking about it, and the news keeps an eye on this crypto drama. But here's the deal. It's a wild one. High volatility, high speculation. Bring a solid risk tolerance and do your homework if you're considering jumping in. The GME meme coin? Well, it's part of the GameStop saga, but in the bigger crypto picture, it's navigating some uncertain waves, especially with those Solana-based meme coins doing their dance. Stay curious, stay cautious, and let's see where this meme coin story takes us next. Factor responsible for downslide. The ups and downs of the GameStop meme coin, or GME, are like a roller coaster driven by factors common in speculative assets. Imagine a sudden twist in the ride due to market manipulation, where trading practices play tricks on the value. Now, GME doesn't have a concrete value. It's like catching vibes and hype. Picture this.
You see, like, it's so, when they say, oh, see, GME, people might mistake it for the stock itself, but he's talking about the coin, right? So this is the mind game that they're playing with the people that are coming, like, at least, like, trying to invest into GameStop, the stock, right? And every time you say GameStop, people, and again, that's the genius of this whole thing, is that they use GME in order to make people think that it's actual, they're talking about the stock itself, that, oh, they don't have actual value, right? Those type of thing. And again, you know, people's minds, sometimes it's very confusing for them, if especially they're not in the play, in GME, investing in the company for a long time, right? Like us. I've been here since, I don't know, November of 21, you know, right after. Let me see. But yeah, we've been here for a long time. And so, you know, I'm kind of numb to all of this news and negative sentiment here. So this is when I first began my position, which is, November 21, 2021. And so, you know, those type of sentiment is meant to confuse people like that, right? And this is why it's so difficult. Like, even at work, I'm trying to get people excited to, you know, to buy GameStop, or at least look into the investment themselves. And it's very difficult because, again, they would say, oh, you're just in a cult or something. Like, of course, lovingly, jokingly, I get that. But, you know, I usually say, hey, I'm trying to convert you to GME cult here, right? Let's look at the balance sheets here. I'm met with resistance with that. But of course, like, hey, you know, I care about these people. That's why I talk to them about it. It's just, again, very difficult for them to understand that. And even if I showed them the balance sheet and they got in, think about it. When I talked about it for them, it was at $15 a share, right? If they were to buy in and they see the value of GameStop at $13 right now, they would have said, you're lying to me at this moment in time. It's like, what is going on with you, right? And so, again, like, you can't win. And it's very, very, very frustrating, to say the least. But anyway, so that's all I have for this one, you guys. So I am going to take an early nap. I feel so very sleepy today for some reason. But I hope you have a good one. You know, it's a good weekend. Enjoy your weekend. Go watch this one if you're feeling bored. It's a pretty good one. Just learn a lot about how the Fed is very manipulative and all that stuff. So yeah. All right. So just stay vigilant, stay cautious, just like this person is saying to you. Good luck to you if you are buying into the meme coins. That is Gamestop. Earnings reports coming. Perhaps we're gonna do some new announcement that we're gonna do something great. So yeah, we'll see. All right. Thank you, Jay. Appreciate you. Okay.